Welcome to Investero. In the world of investing, one of the best ways to build wealth over time is by finding undervalued stocks. These are companies whose current stock prices do not fully reflect their true potential, often due to short-term challenges, negative market sentiment, or being overlooked by the broader investment community. Buying undervalued stocks gives investors the chance to benefit. When the market eventually corrects itself and recognizes the company's real value, in 2025, with inflation pressures, high interest rates, and rapid technological changes, there are still many opportunities to identify strong businesses trading at attractive prices. When looking for undervalued stocks, investors typically analyze a company's fundamentals. This includes metrics like the price-to-earnings ratio, price-to-book ratio, free cash flow, and debt levels. If a company has solid revenue growth, competitive advantages, and good management but is trading at a lower valuation compared to its peers, that stock may be undervalued. For example, some financial institutions remain undervalued because of market fears about slowing economic growth. Yet many of these banks have strong balance sheets, consistent dividend payments, and growing digital banking platforms. As the economy stabilizes, their valuations are likely to rise again. Another area to watch is technology. While some tech stocks are trading at very high valuations, others with strong fundamentals are currently undervalued due to being overshadowed by bigger names like Apple, Microsoft, or Nvidia. Mid-sized companies in artificial intelligence, cybersecurity, and cloud computing may be trading below their fair value, offering great entry points for investors who believe in the long-term potential of these industries. Cybersecurity companies in particular are expected to grow significantly as businesses and governments increase spending to protect data and infrastructure. Healthcare is another sector where undervalued opportunities can be found. Many pharmaceutical companies and biotech firms have strong pipelines of new drugs and treatments, yet their stock prices remain low because of regulatory uncertainty or delayed product launches. As these new therapies move closer to approval, the market could quickly revalue them higher. Healthcare providers and medical device companies also represent solid plays, especially as global populations continue to age and demand for healthcare services grows. Energy stocks are often cyclical, meaning their value rises and falls with oil and gas prices. However, many traditional energy companies remain undervalued despite posting strong profits in recent years. At the same time, renewable energy companies in solar and wind power are sometimes overlooked. Yet they stand to benefit from government policies pushing for clean energy adoption. Investors who can spot undervalued companies in this space before the next wave of demand hits may see significant gains. Consumer goods and retail stocks are also worth examining. Some well-established companies with household names are trading at discounts because of short-term issues like supply chain disruptions or weaker than expected earnings. Yet their brand strength and loyal customer base mean they are well-positioned for recovery. These companies often continue paying dividends even during difficult periods, which makes them appealing for long-term investors. International markets can also be a source of undervalued stocks. While U.S. markets often attract the most attention, companies in Europe, Asia, and emerging markets are sometimes trading at much lower valuations. Many of these firms have strong global operations, but because they are listed outside the U.S., they may not get as much attention from large institutional investors. As global trade and technology improve, these international, undervalued stocks could see strong upside. The key to successfully investing in undervalued stocks is patience. The market may take months or even years to recognize a company's true worth. Investors who focus only on short-term price movements may miss out on the bigger picture. Legendary investors like Warren Buffett have built fortunes by buying high-quality businesses at discounted prices and holding them long enough for their value to shine. Same principle applies in 2025. Identify solid companies, buy them when they are undervalued, and let time do the work. It's also important to avoid value trap stocks that appear cheap but are actually struggling businesses with little chance of recovery. This is why research is crucial. Looking at financial health industry trends and management decisions can help distinguish between a temporarily undervalued company and one that is cheap for a reason. For example, a retailer losing market share year after year with no innovation may not be a good investment even if the stock looks inexpensive. For investors looking to take advantage of undervalued opportunities now, a balanced approach works best. Spreading investments across sectors like finance, technology, healthcare, and energy ensures you're not overexposed to one area. Adding a mix of dividend-paying, undervalued stocks alongside growth-oriented undervalued stocks can give you both stability and upside potential. Ultimately, the best undervalued stocks to buy are those with strong fundamentals, long-term growth potential, and a temporary gap between price and value. By focusing on quality businesses that are currently overlooked or misunderstood by the market, investors can position themselves for strong returns in the years ahead. The key is discipline, patience, and a focus on value rather than hype. Subscribe to Investero